Guys, I'm continuing. Training in trading using the grabber system. And now I would like to show you how to trade using averaging. Look, in the previous video lesson, I showed how to trade with a single deal. I finished the video when I had, I believe, $17 in the account. Now, here's the remainder of the trades. Almost all have closed already. Almost $2,000. So, as you can see, my system works not only on video, but also off video. Yes, that is, as it is I show it regarding the system. And this was trading with a single deal. As for the system, averaging sometimes gives us the opportunity, or rather in principle, most often, almost always gives us the opportunity to earn in those moments when the price starts to sharply move against open positions, and we have the opportunity to catch all these points that the quotes have moved through. For example, if we had a trade here initially on buy, well, let's say, for instance, here, we move it here, then we can make an averaging trade here, and we can do it here. So we make them evenly. And then, when the quotes return down, yes, to close already, not just one trade with a profit or a small loss, yes, as it turns out. But these two additional trades will bring us profit. But I think everyone already knows what averaging is. If you don't know, then in general I've explained it to you. It's about making several more trades at a better price, so that when the quotes return in our favor, we get not just a profit, but a super profit. And so, now, by the way, I had averaging here. Here I opened one trade, and here I opened one trade, and the quotes went back up. And I made a profit here. Now I'll show you, where is it? GBP USD, and here's another GBP USD. Add $104 plus $322. Yes, in just one day I made $400 on just one asset. If I didn't have a trade here, the profit would have been $100. But with the help of the averaging trade, I earned an additional $322. Well, okay. Now I will show you how to set up this system on your platform. So, in order to trade with averaging, how to generally create a portfolio, check out the previous videos. And now I will show you how to set all this up for averaging. So here, what you need to do is add the number of points for trading with averaging. So I recommend adding 500 points. When you enter the number of points for averaging here, the utility will start averaging exactly through this number of points. As you can see, it says step here. If you are averaging, if it's 0, then it's disabled. And so if we set 0 here, the utility will not average and will trade with a single transaction. If we set any number of points here, then averaging will occur through that number of points. Look, set a larger number, because if you set a small one, the utility will average out. Literally, if you set 5 here, it will just be a million trades. Here, before the action is completed, you'll run out of money in your deposit. 500 is acceptable if we had a buy trade. Here, then the next one would be after 500 points, that's somewhere around here. As you can see, the distance is quite large. Such a distance, you can generally select for each currency pair your own distance based on how it visually appears, so that it's not too little and not too much. If you need a more professional solution on how and when exactly to average, then I suggest you visit the investing website. Investing. Okay, and here we look like this. So it wasn't here. Like, guys, we don't need this extra. So Academy tools. So we definitely need it by volatility. Here. So come to tools. Open. Investing. Go to tools. So I lost again. Where are these tools? Here they are. And here. Take volatility. Entered. So here we choose. So here we select in the table the instrument we are trading. We go back to the platform, see what we were looking at. Pound against the US dollar. Okay, let's go to pound USD. Here it is. And we see that here we have 93 points. And this means that 50 last point. This is too little for the pair because on average per day, the currency pair can move 93 points. On average, it moves. And if we said 50, then it will be too little. A small number of points for averaging. And approximately 90 points will be about an hour. Even here, approximately somewhere. So, if the price reaches all the way here, it makes sense to average out if we average here. If the quotes continue to move further down, our trading drawdown will increase, and we need to average precisely when the quotes are turning around, which is approximately at the peak of their movement. And as we observed, on average, they moved 93 points. Let's round it to 90. Suppose regarding the New Zealand dollar against USD, you can do about 50 there. As for the British pound against USD, this currency pair is more volatile and covers a large number of points. In this way, with the help of this subtitles made by Dimatorzok service, using the investing website, we can determine the exact value. For each pair, just take a look. You don't need to check every day. Here, we set $900 like this. In this way, our currency pair will be a utility. It will be set up for averaging. So we go to check USD against the Canadian dollar, 105. We set 100. Just go here. We set 100. Key. Euro against the pound is a slow mover. It moves very slowly, 41 points. We round it to 40, like this. We round it to 40, and here we set the number of points for averaging. Just don't set 40, set 400, because 40 is for 4-digit quotes and 400 is for 5-digit quotes. You see, there are 5 decimal places here. Here, this refers to a 5-digit quote. So, next is euro against the Australian dollar. What do we have? Where do we have? We go here, euro against Australian 120. Great. You see how different everything is. And this will be correct and professional if you want to trade at a pro level. Do it. Act like a pro too. Okay, moving on further. Euro against the New Zealand dollar. We go here 136, rounding to 130. To approximately 130, we'll set 1300 because we have 5 digits. Therefore, in total, this adjustment is necessary. As a result, ultimately, Euro against the Canadian dollar. Let's go. Look, here 110. Okay. 110. Set 110 over snap. Again to pound against the franc. Is it? I would set it to approximately 80 or maybe even a bit more. Well, the pound is such a volatile currency. 800. So, Australian dollar against USD, there it will be around 50, maybe a bit more, right? 60. 60? Good. Set 60. Oh, here. 600, right? I remind you, not just 60, but 600. CAD against the franc. CAD against the franc. 50. That's how we'll set it. 50. 500. To set euro against the franc, it will be even less than euro pound. No, it will be a bit more, 60 for us. But we set 600. Maybe, and we have a 5-digit. Further, we go pound against the Australian dollar. We still have from the past, from my previous trading lesson, this trade remains visible. It floats, but we have a decrease and come and not a decrease. In peak and decrease. Low. That is, I think we will reach the next level. Take profit. And what do we have against pound, against the Australian dollar? It's like 147. Let's set 40. No, towards, we'll round up, let it be 1500, right? 150, that will be 1500. Pound against the Canadian, that will be somewhere around 120. Well, as far as I'm right, yes, 120. Well, rounding up the 30. And considering we have 5 digits, it will be 1300. Let's go. Pound against the New Zealand dollar. This is just, we have a cool and absolutely fantastic pair, 1700, and we will have an absolutely incredible and truly amazing 1700. So in total, the amount is approximately 1700. Everything in total. We have 2 pairs left. New Zealand dollar against USD. This will be around 60 for us. As far as I remember, yes, 60. But we set 600. We set 600 here. 600. And the last pair is USD against the Singapore dollar. USD against the Singapore dollar. There, 70. Okay. 70. We set 700. In this way, we have configured the system for trading with averaging. And it will average, for example, if we made one trade here, then after 70 points, in this case, we set 700 here. It will already average for us, additionally, in higher, if it's a sell trade, or lower, if it's a buy trade, but all this will be averaged by the utility itself, without our intervention. I remind you that initially we will need to select the trading lot here, so that the utility knows what lot size to average with. If you are trading with averaging, then I recommend reducing the trading lot size by half. In this way, or even by 3 times. Because if we, for example, have several trades, then their number should be approximately, let's say, in total, like here we have, or here, do you have a large leverage and a large capital? Then in principle, maybe you don't need to change anything. But regarding money management, watch the lesson. In this video course, I separately explain what lot sizes are and how we will apply them here. Everything about trading using averaging, I have shown. Further, as for ladder averaging, I have demonstrated how to set up the utility for the ladder. Here, you just need to activate it, and this value will be added to each of these levels. As for martingale averaging, you just need to set the multiplication. value, which will be the factor by which the lot size is multiplied, but the ladder and martingale are already more complex, not in terms of understanding, but in terms of complexity. Tension, that is pressure, on your deposit. I do not recommend using the ladder. This is still okay, but I do not recommend using martingale. I will record another video for you regarding the ladder, but I think I will finish now. This video is about the setup, but I will also show how I trade using specifically averaging. I think you will also find it interesting. That's all for now. See you. Goodbye.